Vicki Bott with the U.S. Department of Housing and Urban Development. Buying a home is one of the most exciting and largest purchases most of us ever make. Selecting the right mortgage is a very important part of the home buying process. To help you navigate this process, we've put together 3 videos. They include shopping for your home, shopping for your loan, and closing the deal. Today we'll discuss shopping for a loan. Hopefully by the end of this video, you'll be able to compare various loans and determine how long an interest rate is available to you, what are the key loan terms, and how much will this mortgage cost you. To help you shop for a mortgage and understand the terms being offered to you, we'll show you how to use the Good Faith Estimate. The Good Faith Estimate, or GFE, is a document that mortgage brokers and lenders are legally required to give you shortly after you apply for a loan. We suggest that you shop and compare at least 3 GFEs because this will help you decide on the best mortgage loan for your personal situation and protect you from surprises at the closing table. So what's in the GFE? The GFE is a 3-page form that spells out loan terms and charges related to the loan. Let's review the GFE page by page, focusing on important information you need to know. Page 1 includes an important date section that indicates the period of time which the offer is good. The first line of this section will tell you the date the interest rate offered is good through. When comparing GFEs, make sure you check each GFE to determine whether the interest rate is locked or floating. So how can you tell? Well, if the date on this line is the same date your GFE was issued, then your interest rate is floating. If the interest rate is floating and the terms in the GFE may only be available for a short period of time. If the date on this line is in the future, it means the interest rate represented on your GFE is locked through that date. It is important to note if your interest rate is locked, you still must close your loan on or before that date for that interest rate to be effective. Let's talk about line 2. Different than line 1, line 2 reveals the date many of the loan charges or closing costs are good through. We'll go through these in great detail later, but it's important to know that if you want to move forward with this loan, you must let your mortgage broker or lender know on or before this date, or some charges could change. The last 2 lines include information about the interest rate lock and when you must lock your interest rate if it is floating. Now let's go over the summary of your loan section. The first 3 lines tell you loan amount, the number of years you have to repay your mortgage, and the interest rate. The interest rate is one of the most critically important pieces of information that a GFE will provide you. Make sure as you compare GFEs from different mortgage brokers or lenders that you focus on the interest rate and the charges or closing costs associated with that rate. This section will also indicate how much you'll be expected to pay for principal, interest, and mortgage insurance. Compare this amount with other GFEs, but take note, this does not include property taxes or homeowner insurance payments. Those costs are determined by the property you choose, not by the loan program you're offered. This next part is a series of questions related to whether the loan has particular features like prepayment penalties and balloon payments. Pay particular attention if any of these boxes are checked yes. If that's the case, make sure you ask the lender or broker for a full explanation so you understand how these features could affect your loan and loan payment. If you're unsure, you may also want to ask a trusted financial advisor. All of these features are explained in detail in Shopping for Your Home Loan, HUD settlement cost booklet that you will receive when you apply for a loan, or which can be found on HUD's website at any time. The next section focuses on escrow information and whether a lender will even require an escrow account in order to pay property taxes and homeowners insurance. Once again, the payment amount reflected here only shows your mortgage payment for principal and interest and does not include escrow payments. Be aware that your escrow payment can be a sizable part of your monthly mortgage expense and you'll want to budget accordingly. At the bottom of the first page is a summary of the loan charges which are detailed on page 2 of the GFE. Now let's take a look at page 2. Let's begin with the fees you'll pay, which are referred to as your adjusted origination charges. These include all costs charged by your lender for processing your loan, as well as charges for the interest rate you have chosen. Block 1, Block 2, and Line A all work together to show you the total origination charges you'll be expected to pay. Let's start at the bottom of this section. Line A is important because it shows you the total amount of origination charges you'll pay for your loan, basically your out-of-pocket expenses. Be aware as you review Block 1 and Block 2 that you can pay lower origination costs expressed on Line A in exchange for a higher interest rate. Likewise, you can pay higher origination costs in Line A in exchange for a lower interest rate. Be sure to ask your mortgage broker or lender what options you have. Now let's look at how Block 1 and Block 2 work together to determine what your adjusted origination charges are on Line A. Block 1 shows the amount your mortgage broker or lender gets paid for processing your loan. Block 2 is all about the interest rate. There are 3 boxes in Block 2, and one of these boxes should always be checked. If box 1 is checked, all origination charges are included in Block 1. If box 2 is checked, you are receiving a credit in exchange for a higher interest rate, which reduces the amount of money you will need at closing. If box 3 is checked, you are paying points and receiving a lower interest rate. Paying points allows you to pay additional money up front in order to lower the interest rate and your mortgage payment. The charges or credits in Block 2 are then added or subtracted from Block 1, and the remainder is listed in Line A. Let's take a look at an example. Here, Block 1 tells us that your broker or lender is charging you $6,500 to process your loan. In Block 2, Box 2 is checked, reflecting a credit of $3,000 in exchange for a higher interest rate. This credit will reduce the fees you pay at closing. Subtracting Block 2 from Block 1 results in $3,500, which is the total amount of origination charges that you would pay at closing. Now let's take a look at your charges for all other settlement services. The charges listed in Block 3 through 11 are for services that you are required to pay as a condition of the loan. This includes things like an appraisal, title services, and insurance. The lender may choose which company performs some of these services and may let you choose the company that performs others. If the lender chooses the company that performs the service, the combined cost for those services may not increase more than 10% above the estimated charges on your GFE. If the lender allows you to choose who performs a service, the lender must give you a list that has the name of at least one company for each of these shoppable services. You're not required to use these companies, but if you choose a company that's on this list, the charges for those services cannot increase more than 10% above the charges on your GFE. If you choose a company that is not on the list, the charges for those services may increase from the charges listed on the GFE, and that 10% limit will not apply. The charges for origination and all other settlement services are combined here, and the total is moved to the bottom of page 1. Be sure as you shop for a loan and compare GFEs that you focus on the lender-determined fees shown in blocks 3 through 11. These fees and the amount your mortgage broker or lender gets paid for processing your loan are the costs for getting your mortgage. It is important to note that these charges do not reflect the total amount of money you will need to bring to the closing table. They are the total charges to get the loan, allowing you to compare loan programs. Please ask your real estate agent or lender for an estimate of the total amount of money you will need to bring to closing. Now let's take a look at the last page of the good faith estimate. Page 3 contains 3 sections: a tolerance chart, a trade-off table, and a shopping chart. Earlier I discussed some of the charges had limits on how much they could increase. The tolerance chart gives you more information about which charges may not increase, which charges that in total may not increase more than 10%, and which charges can change. At closing, if the lender exceeds these limits or tolerances, then they must reimburse you the difference, either at closing or within 30 days. Let's take a look at the trade-off table. This table shows you the trade-off between receiving a higher interest rate for lower closing costs and vice versa. You can pay now in terms of paying higher closing costs or pay later through a higher interest rate. You decide which loan program fits your personal situation. Ask your lender about what options you have. The last section on page 3 is a shopping chart. You are able to compare offers by filling in the loan terms and settlement charges from the GFEs you receive from different mortgage brokers or lenders. When comparing loans, make sure that you take into account whether or not interest rates are floating or locked. Compare and decide which loan is best for you and let the mortgage broker or lender know so that you can move forward with the terms and cost shown on your GFE. Once you decide on a mortgage broker or lender, keep your GFE. Bring it to the closing table to compare your estimated charges and loan terms on the GFE to the final charges and loan terms, which will be reflected on a document called the HUD-1 settlement statement. To make it easier for you to shop for a loan with different mortgage brokers or lenders, you only need to pay for a credit report to get a GFE. Once you let the mortgage broker or lender know that you want to proceed with a loan, you may be charged for additional fees. So let's quickly review what you've learned and what you need to focus on as you shop for a loan using your good faith estimate. Looking at the GFE, you should be able to determine if your interest rate is floating or locked, identify and compare the loan terms of the loan offered, like the interest rate and mortgage payment, and compare the charges associated with getting a loan from multiple lenders. To access other home buying videos, including our next video, Closing the Deal, please visit our website at hud.gov/RESPA. Remember that this information is also explained in Shopping for Your Home Loan, HUD Settlement Cost Booklet that you will receive when you apply for a loan and which can be found also on this website. Armed with this information, go shopping for the best loan for you.